Welcome everyone, and thanks for joining today's webinar. Today we're going to explore a very important topic and discuss a few of your options that will allow you to be able to preserve and grow your savings outside the stock market. Who am I? My name is John Payton, and I'm the founder and president of J. Payton Consulting. We're an Atlanta-based business consulting firm serving entrepreneurs and investors throughout the United States and Canada. We represent over 400 franchises internationally, and I'm also the host of the Progressive Investor Radio podcast. Before we get started, I need to begin with a disclaimer. The content included in this webinar is for informational purposes only. It should not be considered legal or financial advice and should not be construed as an offer to sell a franchise. J. Payton Consulting does not make any guarantee or other promise as to any results that may be obtained from using our content. No one should make any investment decision without first consulting his or her own financial advisor and conducting his or her own research and due diligence. To the maximum extent permitted by law, JPC disclaims any and all liability in the event any information, commentary, analysis, opinions, advice, and or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment or other losses. By participating in a webinar or presentation, you are not and do not become a client of JPC, as such relationship may be formed only by specific and explicit agreement with a representative of JPC. If you are interested in such agreement, please contact JPC directly and schedule a personal evaluation. Earlier in my career, I spent many years in the financial services industry and experienced numerous ups and downs with my clients. When things were going good, everyone was happy and making money. Things went bad, which they did every few years. It was hard as a professional to tell my clients to hold on, that selling now will only lock in their loss, or now's the perfect time to buy more in dollar cost average, while at the same time I'm watching their hard-earned savings go down the drain, and I don't know if or when it's going to stop. We then would spend the next few years ever more cautiously moving forward to recapture our previous losses. And just when we thought we had turned the corner and were getting ahead, the market crashes again and we start the process all over again. So, as you can see on the chart, this is a reality. This is history, and it definitely repeats itself. So I asked the question, at whose expense do we continue to participate in this madness? How many years will you have to push back your retirement because the value of your 401k has suffered due to countless market corrections? The good news is that you do have options, and that's what we're going to talk about today. Franchise operation is one of the strategies people have used for many years to get their money out of the stock market and employ their cash. A good franchise opportunity will provide cash yields typically stronger than you can expect in the stock market, and by operating multiple units or concepts, you spread the risk among different markets, and the beautiful thing is, you're no longer a participant in the periodic stock market crashes. Good franchises will still turn a profit even in years when the stock market falls. You don't see Wendy's shutting down just because the stock market takes a drop. This is an example that illustrates the long-term effect of an individual's savings in a qualified plan over time. I use 3 scenarios assuming a $50,000 starting balance. Scenarios 1 and 2 are investments in the stock market with an 8% annual return. In scenario 1, the participant is still contributing $1,200 annually into the plan, and in both scenarios 1 and 2, there is a market crash in years 6 and 11. Scenario 3, that $50,000 starting balance is invested into a franchise, bringing in a 15% rate of return with no market crash impact. These numbers are for illustration purposes, and you can run this same type of scenario using your own numbers. But the point I'm trying to make is that at the end of 11 years, your return on investment is significantly more by investing in a good business as opposed to putting it into the stock market. So what is franchising? If you choose to invest in a business, purchasing a franchising removes a lot of the guesswork. You're purchasing a branded business with existing systems, monitors, and controls in place. The franchise is already engineered to make a profit, and the franchisee will at purchase make decisions to minimize the fixed cost and then operate the business to increase revenue while controlling all of the variable cost. The U.S. franchise market is huge, and you're not entering into uncharted territory either. There are more than 700,000 franchise businesses in the United States, generating 1 out of every 7 jobs in the private sector. We've all heard the saying that if you like what you're doing, you'll never work a day in your life. There are franchises that cover many segments of our economy. You can find a franchise opportunity in almost any industry you can think of. Therefore, you can always find something that's going to be suitable for you. Some of the advantages of franchising? Well, experience in that industry is helpful, but it's not required. Business skills are more valuable, and you immediately come in with a brand to promote. Some brands are more universally known than others, but even new brands have an allure that attracts early adopters. All of the operational systems, monitors, and controls have been developed and debugged. All product and equipment have been sourced, so that eliminates a lot of the guesswork. And finally, you have ongoing training and support aimed at making your business more profitable, so you're not in it by yourself. The advantages for the franchisor are, first, they can expand without any direct investment. That's all covered by the franchisee. And 2, the store operators are owners rather than managers. In other words, those units are being run by someone who has skin in the game. That's a big difference. Franchising is not a guarantee of success. There may be a higher probability of success because it's a duplicate of a successful model, but like any other business, it still has risk. Also, it's not for everyone. If you're that quote-unquote maverick that likes to do things your way, you won't be happy because in most situations, it won't be your way. If you have a pizza franchise, for example, and one beautiful nice day you decide you want to start selling barbecue ribs, it won't happen. And finally, it's a long-term commitment. That's why it's so important for both parties to get to know each other and get comfortable with the idea that it's like a marriage between the parties. So you want to be very thorough in your discovery process. Every circumstance is different regarding the franchisee's level of involvement. You can be heavily involved in all aspects of the daily business as an owner-operator. You can have limited involvement as a semi-absentee owner or executive-level involvement as an absentee owner. Prior to your first franchise purchase, you and a business consultant should sit down and develop a strategy that falls in line with helping you reach your long-term goals. If your plan is to travel and enjoy a carefree lifestyle, saddling yourself down as an owner-operator is contradictory to your objectives. On the other hand, attempting to be an absentee owner with the goal of only owning one unit doesn't maximize your return, and you will be better off with multiple units dividing the cost of an effective management structure. As you can see, your long-term objectives determine the type of ownership model you would want to employ, whether it be single unit, multiple units, or multiple units of multiple concepts. As a multi-unit franchisee, the franchisee comes in with a commitment and a plan to expand and grow within that territory. Higher performing units will offset any underperforming units, and the opportunity to lock down an entire market is very attractive to highly motivated franchisees. In the multi-concept franchise model, these franchisees operate more than one franchise system. By doing this, the franchisee is able to diversify both their opportunities as well as their risk. Those concepts can complement each other or be totally unrelated to each other, but typically will be in the same industry. Once the decision is made to move forward and enter into a franchise agreement, the new franchisee will pay the associated franchise fee and or development fee if applicable. Average franchise fee is about $30,000 per unit. Startup costs vary from franchise to franchise, but include build-out, licenses, permits, equipment, etc. Royalty fees become due to franchisor once the business gets up and running. Those fees are typically 3 to 6% of gross sales. In addition to your personal funds, there are a number of options available to leverage your resources. For those with multi-unit aspirations, these options can be a tremendous help. SBA loans and financing from small business investment companies are there for those who qualify and interested in debt financing. A self-directed 401k plan is an excellent vehicle for funding your franchise purchasing and can be the key component for many to achieve objective of preserving your savings and improving your investment results outside the stock market. For those of you who are already self-directed investors, you already know the benefits of such a plan. For those who don't and may be unfamiliar with the concept, here's a brief video to help explain.
Are you at a crossroads in your life? With the challenging and complicated economic environment we're in today, including corporate downsizing and layoffs, many people are opting to become business owners. Some are starting home-based businesses and others are purchasing a franchise or buying existing businesses. Invest in yourself. Invest in your future. If you want to participate in starting a business, purchasing a franchise, or providing working capital for a business you currently own, using your 401k, IRA, or pension plan is an excellent alternative source. A business-funded 401k with the use of an existing retirement plan is a non-traditional funding source for your business financing needs. According to the Employee Retirement Income Security Act of 1974, this is a completely legitimate strategy and one that has been successful for thousands of businesses in the United States. A 401k business funding plan is a great option with endless possibilities. You can operate a business, draw a salary, and contribute back into your retirement plan with profits from your business. Profits from operating can be directed back to your retirement plan and continue to enjoy tax-deferred status. As an owner of the business, you're eligible to take a salary and receive benefits. At Tenet Financial Group, our goal is to ensure the funding process of your business or franchise is as simple and beneficial as possible. Here's how it works in 4 simple steps. Step 1. You form a C corporation for your new company. Step 2. Your corporation sponsors a 401k plan. Tenet Financial Group's unique business-funded 401k plan has been designed to allow for investment into your corporation. The business-funded 401k plan is pre-approved by the IRS. Step 3. Funds are rolled from your old IRA or 401k to your new company 401k plan. A Tenet Financial Group senior consultant will help you every step of the way through the process of moving your retirement funds from your previous employer or IRA into your new company 401k plan. Step 4. You will wire your funds from the 401k to your business checking account. Your new 401k plan purchases stock in the corporation and the business begins debt-free and cash-rich from the sale of the stock. At this point, the corporation will now be able to purchase your new business or franchise. The thought of using retirement funds can cause some apprehension, but consider that through this investment strategy, you have more control over your retirement plans than with traditional options, and you might be able to realize a much better return on your investment. Invest in yourself. Invest in your future.
In order to get started, you must first meet some minimal financial qualifications. First, a net worth of $500,000 plus and liquid cash of $100,000 plus. If you meet those qualifications, you're ready to move forward. If your net worth is $500,000 plus and you have over $100,000 in assets in a company-sponsored 401k plan, we can provide you assistance in converting over to a self-directed plan. We all have our choices, and we all have to live with the outcomes of the decisions that we make. None of us know when the next big stock market crash will occur. It could be in a year, 5 years, or next week. For me, knowing, understanding, and accepting that every few years a significant portion of my hard-earned savings is going to go down the stock market drain is insane. Doing the same thing over and over again, expecting different results, we must use different strategies if we want to get different results. If making a consistent annual return while standing on the sideline, watching the stock market roller coaster go up and down is where you want to be, take action now. If you're financially qualified and serious about preserving your savings and improving your investment results outside the stock market, visit the website on the screen or text the number that's listed on the screen to request a personal evaluation. Because of high demand, we only take on a few new clients per month. So if you're ready to become a non-participant in the next stock market correction, Act now. I want to thank you all for participating in today's webinar. It is my hope that you found the information both interesting and valuable. You can also stay abreast of topics related to non-stock market investment strategies by following either or both J. Payton Consulting blog, as well as the Progressive Investor Radio podcast. Have a wonderful evening, and I look forward to talking to some of you very soon. Goodbye.